Why the global rise in gold prices is just beginning. Today, we are witnessing alarming signals in global markets. The global debt is approaching 340% of the world's GDP. But is there any hope that these massive debts will ever be repaid? Unlikely. History shows that such expectations are often unfulfilled. Let's look at the numbers. Government debt stands at less than $100 trillion, while the global GDP is $184.7 trillion. The majority of this debt burden falls on corporations and private households. While governments can print money, others do not have this luxury. This leads to increasing risks, particularly in the corporate sector. Debt accumulation has become a persistent trend in recent years. Economic development often struggles without an increase in debt. Take China as an example. To maintain high economic growth rates, Beijing has been actively stimulating the corporate sector and consumer spending, leading to increased debt levels. By the end of 2023, China's debt-to-GDP ratio reached 286%. And this is far from the limit, especially if we compare it to Japan's scenario. The situation in the US is no less concerning. The American debt-to-GDP ratio caught up with China's years ago, and now the US even leads in this indicator. Meanwhile, China's level of monetary expansion has surpassed that of the US several times over. These imbalances pose additional risks on the global stage. Moreover, global trade tensions are intensifying. We are seeing trade wars and political instability becoming the new normal, which could lead to a new wave of inflation. With the anticipated decline in interest rates globally, this could pave the way for an increase in the money supply, particularly in the US. Finally, geopolitical tensions. Any escalation in international relations traditionally drives up prices for precious metals, including gold. The bottom line, trust in traditional currencies is rapidly declining, while contradictions in the global economy are increasing. In such a scenario, the rise in the value of real assets, especially gold, seems almost inevitable. Investors should take note of these factors and consider incorporating precious metals into their portfolios.